Thank you, Paul. Again, my name is Jordan Mejeur. I'm a partner at Cohen Law Group. I see some familiar faces in the crowd, but for those who do not know who we are the largest property damage insurance company in the state of Florida. And specifically, the type of law that we practice and what we're all here talking about is actually called first party property damage. And it's a term that a lot of people don't understand, but what it is different from is third party liability. Just to give you a brief background, if you get in a car wreck with someone and you have to sue that person for your injuries, that's third party, where you're getting money from their, not yours, but their insurance company. If you have your own insurance company because you're a homeowner or a building owner, that is first party. And we exclusively are the largest first party property damage law firm in Florida. Brief background even further, Harvey Cohen, the owner, he's been doing this for over 24 years. And while we are the biggest law firm, we give a boutique touch to every single file. I know there's at least one public adjuster that I've worked with in the past that can probably attest to that. But we've got probably 50 to 55 lawyers and 200 staff. But every single client and vendor that we work with actually gets the personal cell phone number of every single attorney at our firm. So everyone who works with us, whether they're a client, an engineer, contractor, vendor, adjuster, or agent alike, can actually pick up the phone and actually speak with a real attorney. And our intake process is no different. You could call intake right now and speak to an actual human being rather than a robot service that'll call you the next day. Let's dive into a little bit about insurance now. And while I'm speaking, if anybody has any questions, just fire them out. You don't have to wait for me to be done speaking. So we talked a lot about preparation prior to the storm. As for insurance policies, everybody's saying, know what's in your insurance policy. I'm going to go a step further and say you need to get from your agent or your broker an actual certified copy of the insurance policy, which is actually a legally different meaning than just a plain copy of an insurance policy. A copy of your insurance policy does not guarantee legally that you have a full copy jacket to jacket of the policy. How many of you out there in the audience right now have a certified copy of your policy? Don't lie. All right, so like 3 people out of 30. All right? So the first thing you need to do tomorrow is call your agent or your broker, email them. I would actually recommend that you call and email so that you have written documentation in the state of Florida. Once you have written request of a certified copy, there's a timeline on which they have to respond back and provide it to you. It's 7 days, okay? So 7 calendar days they need to provide to you, whether it be your broker, your agent, or the actual underwriters. They need to provide you a certified copy of the policy. That's going to do 2 things. Number one, it's going to tell you what exactly is in your policy, and it'll give you a snapshot, frozen in time, of what's in your policy right now and what should be there for the next 12 months or however many remaining months that you have on your policy date. And I'm going to give you an old war story, and it's actually not that old, and in fact, it actually involved Jess, a claim that she and I worked together 3 or 4 months ago, actually. It was a multi-million-dollar condominium association claim where the property manager did the right thing. A year ago, asked for and retained a copy of the certified policy. And we worked the claim up. We got it, properly documented, estimated. I got retained because the carrier, dug their heels in, and we sent the demand to the carrier. And in response, the carrier said, "I'm not paying for these reasons that are cited in this endorsement." And I said, "Hold on, that endorsement is not in the certified copy of the policy. It looks like you have a wrong copy." Well, they sent me what appeared to be a certified copy of the same policy at first blush, but if you actually look at it, the date had been modified. The certification autograph from the executive officer in the underwriting department had also been modified. So someone had tampered with that policy with that insurance company. And this happens all the time. I let them know that, I didn't hide it and go sue them. I let them know, like, hey, you're tampering with this policy. It's actually a felony. If you didn't know that, Mr. Insurance Company. It's called post-loss underwriting, which is when you have a claim, and then as a carrier or an underwriter, you change the policy to your own benefit, which you cannot do because once you have a claim, the policy's frozen, okay? So we caught this particular carrier engaging in post-loss underwriting. They finally admitted and paid the claim. And I know one of the questions is probably going to be, who is it? Well, I can't tell you. We got an NDA. But having said, that just gives you an idea into the ecosystem that the Florida legislature, and frankly, the legislature around the United States right now, has created with the insurance industry. I don't know if y'all have watched the news this morning. Heritage got fined $1 million for defrauding their own policyholders. That was literally this morning by the OIR. So the point of all that and the takeaway of all that is not, obviously take photos, do your diligence in documenting your own property, not just the inside of your property, the entire building envelope, top to bottom. If you cannot do it, hire a professional who can. I know there's someone in the audience, many actually, who are certified and trained to do that. Do not forget your personal items, your contents. But number one, and most importantly, get a certified copy of your policy, okay? So we've talked about preparation. Now I'm going to give you 2 more points. One is a legal update from laws that have been changed over the last year or two. And the last thing I'll talk about is actual terms that you should look for in your policy that you want and also don't want. So legal updates. Does everybody know how long you have to file an insurance claim who is not a public adjuster or an agent in the audience?
7 years.
You have 1 year. You have 1 year from the date of loss to report an insurance claim in the state of Florida. That changed 2 years ago. Used to be 3 years, prior to that was 5 years, okay? Now you have 1 year. Anything after 2023 and onward, you have 1 year from the date of loss to report that claim. So the quicker in time that you can report it, the quicker in time you can have that claim documented, the best chance you have at being paid properly and fast in time. So you've got 1 year. Does anybody know how long you have to report a supplement? And when I say supplement, I mean you reported the claim, you thought you were paid, and then you found some other damages that have made themselves evident now because we're 10 months past the storm and your window damage is just now starting to exhibit itself. Well, you are actually under a set of timeline to report that supplement. Does anybody know? 18 months from the date of loss on a previously adjusted claim. Do you know how much it used to be? It used to be 3 years. Yeah, prior to DeSantis granting the insurance, I'm sorry if you like DeSantis, but let's be real. He granted the insurance company's wish list, okay? And that's how these laws got changed. So it's 18 months from the date of loss. And it's not really a problem. You just got to make sure you know about it. Counsel your clients that you deal with, okay? You've got 1 year to report the claim, and after the claim's been adjusted, you've got 18 months to report a supplement from the date of loss, not from the date that they adjusted the claim, but from the date of loss. Last little legal update, and I could talk to you till midnight about legal updates, but this is another big one, is an insurance company is now, and this is one of the good updates that had been passed a year and a half ago, legally prohibited from non-renewing your policy if you have an open claim that has not been appropriately settled. Now I'm going to repeat myself. A carrier is no longer allowed to legally terminate your policy, non-renew it, cancel it if you've got a pending claim. And I know that y'all have dealt with customers, both on the residential side and the commercial side, that get non-renewal letters. For the insurance agent, have you seen non-renewal letters go out with claims? The problem is nobody's policing them until they hire attorneys like us, okay? And we actually send anti-non-renewal letters out informing the carriers of what the law is, because the underwriters don't know, or they do know and they're being nefarious. And if they don't adhere to our demands, then we will file an injunction against it. We don't want to go to court, even though we are bulldogs in court. We do not want to go to court. In fact, we want to settle every claim prior to going to court, but if they want to go to court, we'll take them to court, all right? Those are the legal updates, and now I'm going to give you some policy provisions that I'm sure some of you either have in your policy that you don't want or are trying to be put in your policy that you should not let be in your policy. So when you do get your certified copy of your policy, because the majority of you don't have it, when you ask for it tomorrow and you get it in the next week, By the way, if you don't get it, let me know because that's an action that we can act on as well. You want to look at some policy provisions and make sure that you do not have these in your insurance policy. Does everybody know the difference between actual cash value and replacement cost value? All right, well, there's some people in here that don't. Actual cash value policy, you do not want. That means that you will only be getting the amount after the buildings have been depreciated, or the windows have been depreciated, or the roof's been depreciated, or you've got a roof pay schedule where your roof's X years old and the carrier is unilaterally going to determine how much they pay you based on this actual cash value policy endorsement. Everybody wants replacement cost value. Not only that, it's required under Fannie Mae and Freddie Mac. Well, then how can carriers sell non-replacement cost value policies? Insurance agent in the audience? It's because nobody's policing them, okay? I don't mean to call you out. You're the only agent that I met today. So, you do not want an actual cash value policy. We see a lot of commercial clients and residential clients alike come to us and say, hey, we've been denied or we've been underpaid. Can you help us out? And I say, yeah, let's look at the policy. And they have an ACV endorsement on the entire policy or an ACV endorsement on just the roof. And I say, ma'am, I know that your roof costs, $70,000 for this tile roof, but the carrier is legally only obligated to pay $35,000 of that. Oh, and then take away your $10,000 hurricane deductible because you have an ACV only policy. And that's due to a lot of things, just ignorance in the community and agents and brokers not counseling their own customers. My wife works for the carrier, so I know how the sausage is made, all right? So, what acronym do you not want in your policy? ACV. You want RCV, but not just on your roof, you want it on every element of your property. And all you have to do is simply email your broker, your agent to say, hey, make sure I have a full replacement cost value policy. And if the agent or broker that you're working with can't get you one, there's 1 million of them in the state of Florida, all right? He can probably get you one. All right? All right, so let's talk about another provision that you do not want in your policy, and that is mandatory arbitration. Everybody's heard of arbitration before. Oh, arbitration this, arbitration that. Know this, arbitration never helps the consumer. It only helps corporations and big businesses. In fact, in the state of Florida, the arbitration provision, if you do allow one to be in your policy, has to be seated by an arbitration panel that is currently working for insurance companies. Not by public adjusters, not by first-party property insurance lawyers or contractors that are for your side. The panel is made up of people that work for the insurance industry, and they're going to be the ones to determine how much you get paid. And if you're working with a broker or an agent that doesn't know what they're doing, you say, hey, Jack, give me the cheapest policy out there. They're going to give you a mandatory arbitration policy with ACV coverage, and you're going to be saving, $300. When you could have had an RCV policy, just pay $300 more, okay? So you don't want mandatory arbitration, and you don't want actual cash value, all right? Does anybody have people's trust out there? I'll call them out, I don't care. You don't want a right to repair policy. Anybody heard of that? Managed repair programs. We call them right to repair policies, and they are out there. If you have a right to repair policy, then you no longer can select any of these vendors to work for you and properly document and repair your property and document the claim. You are giving up your ability to fix your own house to your insurance company. If that's okay with you, then that's okay with you. But I've not come across a single client today that they were okay with it. Okay, so make sure you're telling your broker that you do not want an ACV policy, that you do not want a mandatory arbitration policy, and you do not want a managed repair or right to repair policy. And the last thing I'll give you that you do not want is a roof deductible. Anybody heard of roof deductible? The roof deductible now, and these are all things that are being permissibly allowed by the Florida legislature per statute. A roof deductible allows the carrier to offset your deductible if you have a roof claim that is a non-hurricane roof claim, which we have these all the time, windstorms that are non-named windstorms, hailstorms, debris strikes, things like that. It essentially mathematically equates to half the cost of your roof. So if you have a hailstorm or a non-named windstorm that comes and damages your roof, I don't care if it's 5 years old, 10 years old, it doesn't matter. You're now going to be self-insuring for half the cost of your roof because you chose to save $25 on your policy and get a roof deductible. I'm dead serious. All right? So those are the things that you do not want. The things that you do want, and I'm just going to give you two of them. We already talked about one of them. Replacement cost of value. You want that on the whole policy. A lot of agents I see get confused and they say, oh, we'll just get you a replacement cost policy on, these aspects of coverage A. No, Jack, we want it on the whole thing. Top to bottom, left to right, inside and out, RCV. Simple as that, all right? So you want replacement cost policy, all right? The other thing you want to make sure you have is ordinance and law coverage, all right? Ordinance and law coverage will pay for things that are not damaged, that when you do have a covered peril that damages your property and you have to replace other areas or bring things up to building code, to current building code, that coverage will kick in. And in fact, if you have a total loss, oftentimes it'll pay a percentage above your policy limits if you chose to elect ordinance and law coverage. It could be 25% over your limits if you have a total loss even, okay? So tell him you want, or her, that you want full RCV coverage and ordinance and law coverage. So I think we went over the legal updates. We went over some policy terms. Like I said, I could talk to you till we're past midnight tomorrow about all of these things. This is what I eat, sleep, breathe, and live and do for a living. We have a passion for it at Cohen Law Group. You could call us anytime, even if you don't have a claim, or even if you're working with another law firm. We help everybody. We treat everybody like family.